Ladies and gentlemen, good afternoon, and thank you for joining us for the post-result conference of UCO Bank. It is my pleasure to host the senior management of UCO Bank. We have with us Mr. Ashwini Kumar, MD and CEO, sir, Mr. Rajendra Kumar Sabu, Executive Director, and Mr. Vijay Kumar Kamble, Executive Director. We will begin the call with remarks from the management, post which we'll open the floor for Q&A. Over to you, MD, sir. UCO Bank, can you unmute yourself? So we can't hear you. Can you unmute yourself?
Yes, now you can hear me.
Yes, sir.
A very good afternoon. I welcome all the analysts to this UCO Bank Q3 performance result. I have along with me our Executive Director, Mr. Sabu, Mr. Kamble, and CFO, all vertical heads in this room. Just I'll give you a brief about the bank's performance under Q3. We have already uploaded the presentation. I hope everybody has gone through. Just I'll give you a brief, then we'll go for the question answer. Total business of the bank grew by 10.46% on a YOY basis and 4.39% on a quarter-on-quarter basis. Of which the deposit grew by 5.38% on a YOY and 2.7% on a quarter-on-quarter basis. Gross advances grew by 18.63% on YOY and 6.83% on quarter-on-quarter basis. Out of gross advances, our RAM portfolio that grew by 17.70% on a YOY basis and 4.08% on a quarter-on-quarter basis. Of RAM, retail advances grew by 18% on YOY basis and 5.07% on a quarter-on-quarter basis. Out of retail, our home vertical grew by 20.67% on a YOY basis and 4.4% on a quarter-on-quarter basis. And vehicle loan portfolio grew by 28.92% on a YOY basis and 8.37% on a quarter-on-quarter basis. Our agriculture advances grew by 13.22% on a YOY basis and 1.60% on a quarter-on-quarter basis. MSME grew by 20.79% on a YOY basis and 4.76% on a quarter-on-quarter basis. Business per employee of the bank, which was hovering around 18 to 19 crore, now it has crossed 20 crore. Operating profit for the quarter ended stood at 1,119 crore as against 982 crore previous quarter. So quarter on quarter there was a growth of 14%, and net profit also for the quarter was 503 crore as against 402 crore for the previous quarter. So there was a growth of 25% on a quarter on quarter basis, but on YOY basis there was a decline of net profit. Gross NPA, I'll talk about the asset quality. Gross NPA, there is a trajectory of reduction on a quarter basis. Now the GNPA has improved to 3.85% as against 5.63% year ago and 4.14% on a quarter ago. So there is by registering an improvement of 178 bips on a YOY basis and 29 bips on a quarter basis. Similarly, net NPA has also come down to 0.98% as on 31st December 23 as against 1.66% as on December 22, thereby registering an improvement of 68 bips on a YOY basis and 13 bips on a quarter basis. Our PCR continues to improve. Now it stands 95.21 basis on a as on December 23, and our tangible PCR has crossed 75%. CRAR of the bank continue to be good. It is at 16.01% as on December 2023, and this is without considering 9 months profit. If we add 9 months profit, our CRAR will be around 16.94%. Our NIM continues to be around 3%. it was 3.02%, in domestic NIM 3.02%. Overall global NIM was maintained at 2.84%. Our slippages are under control. Our slippages ratio has come down now. The slippage ratio for the current quarter is 1.09% only, and there is a declining trend in the slippages on an overall basis. This was all about brief performance about the bank. I'll just talk about 2 minutes about the initiatives which the bank is taking now. A bank has already floated RFP for the digital transformation, it is for onboarding the digital knowledge partner, and that maybe another 7 to 10 days will be onboarding the knowledge partner, and bank will start the digital transformation journey. Performance management system bank has already completed, and HR transformation. Now the bank is focusing on the learning and development transformation in next quarter, for the remaining part of this quarter and the next quarter. And with regard to enhancement in cyber security, we are going for additional cyber security tools, and we are also going for the API gateway. We have also planned for onboarding the onboarding is done. We are planning for enhancement in our infrastructure by virtualization of servers in the next quarter, and we have also onboarded for we have also placed order for the integrated treasury, new state-of-art treasury solution, and last quarter we started our state-of-art call center, where IVR facility is also available, and for MSMP Empower, we have started under CSR activity at this journey for online training to MSME entrepreneurs in a regional language, and that will be through CSR from our bank. And these are the two initial thoughts. I think if we want to add anything. So now I think we can go ahead with the presentation.
Thank you, MD sir, for your opening remarks. We will open the floor for Q&A in a couple of minutes. Whoever wishes to ask a question, please raise your hand. We'll wait for a minute for the question queue to assemble. We have the first question from the line of Mr. Dale. Sir, you've been unmuted. Please ask the question.
Hello, can you hear me?
Yeah,
Yes,
Mr. Deo.
Okay, thank you very much, sir, for your very excellent presentation slides and your introduction. I just have two questions. First is, as a bank, how much funding are you providing to renewable energy sector, and particularly in solar, wind, and water? Can you give some estimates?
Okay.
And second question is, why no dividend for, that's all.
Renewable, solar, wind, and power. I'll give you, give me some time. I'll have to get the data that how much is given for renewable, wind, and power. As on date, we have given 702 crore for renewable sector, and now we are launching for rooftop, as the scheme has been announced by our Honorable Prime Minister Shri Modi ji. So we are launching new product for rooftop solar also, maybe today or tomorrow. That is under process. That product will be launched. And for dividend, last year we could not get the permission from Reserve Bank of India. Maybe we'll wait for the approval from Reserve Bank of India. Then only we will be able to comment on that.
Sir, but RBI, I'm sorry to interrupt you, sir, but RBI, I read in some newspaper, gave some instructions regarding that. The
RBI has given some draft guidelines for that, But we are yet to get the final guidelines. Based on that, only we will provide for dividend and we'll give you the guidance on the dividend term.
Thank you very much, sir. Thank you.
Thank you, sir. Anyone who wishes to ask a question, please raise your hand. We have the next question from the line of Sushil Choksi. So your line has been unmuted.
Congratulations on Team UCO for very stable result and progress on credit, whether it was RAM or corporate. Sir, looking at current CD ratio and the market condition where money market is short, you are aware what is the system-wide shortage today. How are we placed to take the benefit in the current quarter, specifically where the money market may remain elevated despite bond market being below 7%?
Sir, if you look at our CD ratio, which was hovering around 63 to 64, now it is touching 70, and that was our target also at the beginning of the year, that we intend to reach 70 first and then to cross 72 and 73. And if you look at our LCR, it is around 140% now, and we have surplus securities available which we are using to borrow in the TREPS market. As far as deposits is concerned, yes, of course there is a increase in the deposit rate, but we are going very selectively in the deposits. We are using TREPS market for our short-term requirement, and going forward to take more resources, we have already launched, revamped our Suvidha salary saving bank scheme, which is bundled with the insurance product. Similarly, current account for the businessman, that is also bundled with the insurance product. So these are the two initiatives, and we have already launched our we have increased rate of interest on the short-term deposit of 300 days to attract fresh deposits also. So these are the few things we have taken for raising resources in this quarter.
Sir, how do you see your cost of deposit in next 1 or 2 quarters by the time market will peak out?
So my cost, if you look at our cost of deposit is increasing, but not so elevated. We'll try to contain our cost of deposit going forward also, but there will be some increase in the cost of deposit.
But any measure whether it will increase by 5 bits, 10 bits, because our loan pricing linked to MCLR can easily absorb it. So based on that, I see your NII improving. So how much, rough estimate, I don't need an exact number.
Maybe if you look at our trajectory, I'll just give me a second. The trajectory is, look at our trajectory of cost of deposit, that in September it was 4.77, now it is 4.91, right? And a year ago it was 4.12. So in 1 year, around 80 bits only it has increased. So I think maybe 10 to 12 bits more there can be increase in cost of deposit, because now the repricing is also happening. The deposit which we took last year, that all are getting repriced. So there can be maybe 5 to 10 bits increase in the cost of deposit.
So do you see the pricing power is in your hand compared to a customer, at least in the current quarter?
See, if you look at pricing power in respect of advances, yes, that is a pricing power has come back to the lender. Now, in many of the cases, we have increased the prices also, and wherever they are not agreeing, we have asked them to repay also. So that is there in the market.
So traditionally, UCO and Eastern banks had a very good CASA rate, specifically coming out from the eastern states, that is Assam and adjoining area. How do you see that we re-energize ourselves to increase our CASA from the region which can be a big win-win situation for a bank like UCO?
Hey, sir, I already explained earlier when our CASA ratio hovers around 37 to 38% traditionally, if you look at our previous quarters performance, and we continue to maintain that. There is not much deterioration in the overall CASA ratio. But to answer your specific question, what we are doing, I have already spoken that during this, on our foundation day, 6th of January, we have already revamped our salary scheme where we were offering insurance for a very smaller amount of insurance, whereas in the industry, other banks are offering higher amount of insurance and other ancillary incentives or benefits along with the saving account. To enhance the scope, sourcing saving accounts, we have revamped the entire scheme and we have revamped the current account product also. So both these products have been launched in the market, and I expect a good amount of CASA to generate from not only from the east, from the other parts of the country also.
So, my last question in this round, sir, you have done reasonably well on your RAM. Reasonably means much better than market expectation. There is position because property prices are rising, auto sales are increasing, maybe salary account linkage to loans is possible. Do you see your market share and your business momentum on that segment showing a similar or a better trajectory in the current quarter or 2024 as a calendar?
Sir, if you look at auto market, currently the data suggests that the SUVs are selling more than the other cars. And similarly, if you look at our bank's vehicle loan portfolio, you will find that during this quarter there was around 8 to 9% increase on a quarter-on-quarter basis. And on YOY basis also, our increase in the vehicle loan portfolio is around 28%. So a good amount of traction is there for the increased ticket advances or higher ticket advances in vehicle loan portfolio. Similarly, in the housing loan also, the growth percentage indicates quite well in a quarter 4.44. It means very clearly that the high ticket advances, we are focusing on high ticket advances, and we are also trying to partner or approve projects of a renowned or big builders where the ticket size is also high. So and we are approving DSAs also on a regular basis and approving projects tying up with the reputed builders and or big builders of the area, because there are certain renowned builders across the country, but area specific builders are also there. So we are trying to approve those projects on an ongoing basis to enhance our reach to those areas and enhance our increase in our ticket size.
Sir, my last question to Sabuji, what is his outlook on treasury market specifically pertaining to our book, and maybe current year 10-year GSEC is stable and looks like world market is going to be indicating that there's a rate cut in second half. So how are we placing ourselves despite money market being tight at CD ratio of 17 to take the benefit of it?
Yes. So thank you, Choksiji. But let me tell you that our position in the treasury remains more or less the same as it was in the last quarter, as is reflected in our numbers also. So our total investments are more or less at the same level, around 95,000 crore. And whatever the maturities have been there, we have invested in newer securities and maintaining the same ratio. Still, our SLR is very high in comparison to what is required. So we are holding surplus SLR. That's why we are selectively going for the deposits, and we are using these SLRs to borrow against them. As far as the view is concerned, the treasury, you can see that after this declaration of inclusion of India bonds in the JP Morgan index, and also the news about that Bloomberg index, there has been some activity in the market, and there are selectively buying also emerging in the market. And we have seen some yield improvement also in the last quarter in January also. And I think inflation now under control, maybe still it is out of the target range of 4%, but still it is within 6% now. And if going forward we are able to contain this inflation, which is seems like that, so the treasury outlook remains positive, as we are there to means on wherever opportunity arises, we will be booking profits as well, wherever we have the positions, and more or less we will be maintaining the treasury book.
Thank you for answering all my questions, and best wishes to UCO team for 2024.
Thank you.
Thank you, Sushilji. We have the next question from the line of Amit Mishra. Amit,
Hello, can you hear me?
so your voice is muffled.
Now, can you hear me?
Yes, Amit, yes.
Good evening, sir. Good evening.
Good
Sir, my first question is in continuation of previous question, your RAM book. So, what is our target for for 5 years target to maintain the RAM ratio? Like right now we are at 60% RAM and rest is corporate. So, do we want to continue with this percentage, or do we want to increase the corporate book?
See, our percentage is 60%, and we will continue to be around 60 to 62. So our RAM percentage will continue. Our vision is to continue at 60%.
Okay, then within RAM, we want to at retail we are at 25%, and MSME is 20. So do you want to retain the same ratio, or we want to decrease the MSME or increase the RAM?
No. Because there are a lot of opportunities in MSME as well, and these MSMEs will transform into mid corporates and large corporates going forward. So we'll continue to maintain the similar proportion going forward as well.
Okay, sir. At what rate we have done the wage rate provisions?
We have done as per the agreement entered into 17%. This quarter we have made additional provision of around 277 crore. Previous December 22 quarter provision was only 20 crore. So now 257 crore additional provision is there. Last quarter we did 100 crore. The last quarter we did 80 crore. So December and March we provided slightly on a lower side last year, 20 crore each. And whatever shortfall was there, now we have fully provided in this quarter.
Okay, sir. Sir, what are your NIMs on overseas business? Like, only overseas business. Like our domestic NIM is 3.02, but our overall NIM is 2.84.
Yes. Overseas NIM is slightly lower side.
Around 1.6.
1.5 or
Any
1.6.
specific reason for this, or do we want to decrease our overseas book in future?
No. Overseas NIM is like this only on an average. If you look at any bank, overseas NIM is in this range only. Because that is all SOFR linked advances. So their NIM is hovering in this range only.
Okay, got it, sir. Sir, I might have missed in your opening remarks. I joined it late. Can you give me the guidance for FY'24 NIM and loan growth for full year?
See, our guidance for loan growth is 12 to 13%, and we continue to maintain that guidance. Approximately, we are already there around 10%. We have already achieved on a YOY basis, YTD basis. So 12 to 13% we gave guidance in the beginning, and we will continue to maintain that. Slippage ratio guidance we had given 1.25%. Now currently we are already below 1.25. For this quarter we are at 1.20, and we expect the same trend to continue. And so far as these are the two things. Third thing, NIM we continue to maintain NIM around 3%. Even though in these tight conditions, our endeavor will be to maintain 3%.
Okay, thank you, sir. Thank you for answering my questions. Thank you.
Thank you. We have our next question from the line of Savesh Mutta.
Yeah, hi, good afternoon, sir. You able to hear me, sir?
Yes, Sarvesh.
Yes, sir. Sir, my first question is our 14% advances are going towards NBFCs. And in light of the recent RBI regulations, do you see any impact on those?
14% are? Sorry, come again.
14% in
Uh,
NBFC.
NBFC. Oh, okay. NBFC. The recent RBI guidelines, they have given increase in risk weight, which we have already factored in this quarter. And there was a increase in risk weight portfolio of around 4,500 crore, and that translates into around 60 bips of CRAR impact, which we have already taken into this quarter.
Okay, and any AIF related provisions that you take?
AIF, we don't have any exposure. We have only hardly 2.5 crore to AIF, but that AIF has not lent to the corporate to whom we are also the lender. So there is no requirement of any provision on that. That is hardly 2.5 crore.
Okay. Thanks for the clarification. And sir, on cost to income ratio, for last couple of quarters, we are above 60%. And if we look at full year FY'23, we were at 55-56%. So do you think in the coming 2-3 quarters, we'll be back in the early 50s kind of a range?
Yeah, and next year we expect that cost to income ratio to come down because bank has already taken a lot of initiatives for reduction in the cost. Like we are looking into the premises because rent is a substantial outgo. Teams are looking into the electricity cost also along with the premises. Wherever we have surplus, so space audit is going on. So we'll try to surrender surplus premises. So far as the staff cost is concerned, that will continue to be there. And this quarter we have already provided for extra 257 crores. Otherwise, cost income ratio would have been a little lower. But since wage provision was to be required, that we have made. And next quarter onwards, I think 100 to 120 crore on a quarterly basis wage increase load will be there. So in this quarter, 150 crore extra load is there. In next quarter, it will be maybe 120 crore.
Okay. And on our advances growth, we've grown quite well this quarter. And when we compare it to other PSU banks, our growth has been much better. So what exactly we are doing in terms of processes that we are outgrowing other PSU banks?
See, if you look at our retail growth overall, that is well supported by the improved TAT. We have done the LOS of all our retail journeys. So the TAT is monitored from the right at the time the application is made into the system, and that is being monitored. As a result, there is an increase in our the growth in our home loan, retail, agri, MSME, everywhere. And so far as the corporate, and there is a corporate growth also. In the corporate also, we look at we have grown around 50% in PSUs and 50% in corporate. So there is a mix, and the only mantra which team is trying to achieve is through TAT. As we are in a position to reduce the TAT, I think we are in a better position to bargain a little higher interest also and the fees also.
Okay. And sir, within retail loans, our growth has been broad-based, like vehicle loans, home loans. And so home loans being a majority part of our retail book, how have the yields shaped up in home loans, especially if you look at last 4 to 6 quarters?
See, our rate of interest or the pricing on home loan is based on the CIBIL score. So based on the CIBIL score, our generally our onboarding is more than 700 CIBIL score, and where our rate ranges from 8.45% to 8.9. 8.9. So in this range, we are onboarding our housing loan customer. Similarly, in vehicle loan also, it is range bound depending upon the civil score. Again, it starts from a 8.45 for the customers who have already availed housing loan from us. Slightly lower rate is for them, and to others it is starting from 8.55 to 8.90 or 9. It goes up to 9.30 based on the rates. So this is the broad range where the onboarding is happening in the retail portfolio.
Okay, okay. And sir, on the corporate side, we grew 14% this quarter. Where exactly is the growth coming from? Small corporates or mid corporates? And what industries are we lending to?
I think, see, there are, I'll give me a second. I have the detail. No, 9 months. See, in this 9 months, in the total around 18,000 crore we have sanctioned in this quarter, last quarter, 18,000 crore to various customers, of which the NBFCs are also there around 20 to 25% is NBFCs, and the bank is also there. Infrastructure is also there around 2,000 crore. It is well spread. Civil supplies are also 2,000 crore, and iron and steel is also there 1,800, and pool also we have done 1,500. So it is all spread across various segments.
Okay, and as the size of the company, like what kind of turnover are these companies broadly?
These are all more than 100 to 200 crore turnover companies. Triple A, double A. Our onboarding is mostly more than triple B and above.
Okay, okay. And sir, on return on assets, we have given a 0.67% this quarter, and last year we were at 0.85. So, what is your exit FY'24 ROA guidance as well as your medium to long term ROA guidance? Do you see going towards 1% ROA as what other PSU banks are achieving?
Sir, let me tell you, first our endeavor is to improve our operational efficiency, to control our cost to income ratio, and improve our operating profit going forward on a quarter basis and profitability. So as we improve on operational efficiency and operating profit, I think our on a quarter basis our ROA will continue to improve. So far as 1% ROA is concerned, I think for our bank size, given the current situation we are, it will take maybe a year or so to reach to that level. Maybe next year we'll just plan that when next quarter we will plan for the next year also. But it will take little time to reach to 1%.
Okay, okay. And sir, on slippages, MSME slippages have again increased this quarter. What exactly is happening over there?
No. If you look at our slippages in the total slippages have come down. June it was 536, September 578, and now 482. Of
Yes,
that,
yes.
SME segment slippages are hovering around 150 to 200 crore on a quarter. Last quarter, our slippages, June quarter in MSME segment was 260 crore, and last quarter, September, it was 156 crore. This quarter, 180 crore. So it is range bound, 150 to 200 crore. And we expect to come the MSME slippages to come down because our restructure book is also coming down on a quarter basis.
Okay, okay. And sir, just your thoughts on the capital raising plan. We know that the government shareholding is at 95%. You intend to raise equity capital of 2,000 crores. So, what's the plan behind that, sir?
See, if you look at our CRAR and adding back the profitability of 9 months, our CRAR is very comfortable, 16.94%, even after considering the growth which we have achieved in the 9 months. And so far as the capital requirement for the growth, there is no requirement of capital for the growth, but yes, government hot yielding is very high. That's the reason we have taken the approval also. During this quarter, we don't have any plans, but next year, once we'll go to the board again for approval of for the capital raising plan, and we may approach government also maybe for OFS or for QIP, whatever we plan in the next year.
Okay, sir. Thank you. Thanks for answering all my questions. Thank you, sir.
We have our next question from Barnaval.
Yes, sir. The question again on the NBFC exposure. So, are we able to pass on the rate increase to the customer due to change in the RWA guideline? Because in some of the PSU banks commentary, what we heard that there was pricing pressure they are not able to pass on the rate increase due to change in RWA. So, are we able to pass on the rate increase to the customer on your NBFC exposure side?
In respect of NBFC exposures, we have already taken up the matter with many of the NBFCs, and some of the NBFCs have agreed, and few were not agreed. So we have got it repaid also from them. But again, there was now they have agreed again, and we have decided with the improved pricing to make that loan available. So it was just to give you a flavor, 1,000 crore was got repaid also in this January, but now they have agreed for the increased pricing. So we have again lent to them. So on a case-to-case basis, we are taking call for all NBFCs one by one, where we can increase and where they are not able to absorb. We are exploring the option of coming out.
Okay, thank you, sir. And the next question is on the recovery from return of account. If we look at the number in this quarter, it was quite strong at 600 crore plus, as against the 296 crore in the previous quarter. So what is your view on this, how one should look at this number going ahead? What is the write-off pool you have available? So what kind of recovery from this return of account we expect going ahead?
See, if you look at recovery from write-off account during this quarter, I think last quarter also I explained that in one account we were expecting recovery in the last quarter, but it did not happen. This quarter we got recovery from PW account around 390.
690.
No, 300. One account.
One account.
390 crore from one account only, and that is the reason recovery from return of account is quite elevated in this quarter. But on a sustainable basis, I think it should be around 250 to 300 crore on a sustainable basis on the quarter-to-quarter going forward.
Okay, sir. Thank you.
Now, if anyone wishes to ask a question, please raise your hand. We have our next question from the line of Sushil. Sir, you've been unmuted.
Sir, before I get to our business, I want to take something from your history, your experience of Ashwini ji, yourself, Sabu ji, and Bank of Maharashtra, Mr. Kavle. Sir, you all have rich experience starting from OBC, PNB, Indian Bank. Sabu ji is from PNB and Bank of Maharashtra. Looking at the curve between three of you today, if UCO Bank has to achieve something in next 12 months, what are the main initiatives which you will do to strengthen the bank? Because you are the only bank from a public sector which is in eastern region, and lot of activities starting from mining, railway, manufacturing, bamboo, various other initiatives. But what are the 3-4 steps which you take? The bank would be much higher elevated in 2025 from 24.
Choksi, one important initiative, I think, which I will not hesitate in accepting, that we are little behind in the digitization. So first and foremost step in this next financial year, we are focusing on the digitization, because as we look at the way to increase CASA, the way to increase the stickiness of the customer, I think digital adoption by our customers is a must. And to ensure the digital adoption, I think the first and foremost thing is availability of all the products on the digital platform, so that I onboard the customer and then they are there permanently with me, because I am able to cross-sell all my products or to service all their requirements which a customer has. So the first and the foremost will be the digital transformation, for which we have already floated RFP for the knowledge partner, and hopefully by next 10 days we'll be onboarding, and next financial year we'll be starting our digital transformation journey in a big way. Then we can focus on the digital business, because currently we are not able to count or focus on the digital business for want of our digital adoption. Then the stage will be the digital business will be our focus in the next financial year. We will be monitoring how much business we are generating through digital SI. That will help me in reducing my operating cost also, and cost to income ratio will also be improving with this initiative. Second, another initiative from the product size, which you talked about for various, our MSME team is already working on different products, and now we will be focusing on the cluster wise approach in this financial year. So based on the cluster specific schemes for each area will be our focus area. So there, based on the cluster, we make a scheme and we launch a product scheme there, and we start generating business out of that cluster. Third thing, for anything we need to have a skilled team, skilled people. For that, we have already gone to the market for hiring a skilled level in IT, in risk management, in credit, in data analytics, and we will be onboarding our new people or the staff with all those skills. For improving the skill of our own people who are already there or upskilling them, we will be now revamping our entire learning and development module and the journey, so that we are able to upskill our or reskill our own people as well to face the new challenges or the journeys or the digital adoption or cluster specific or CASA, whatever. So the change management program will be the key focus to our this learning and development transformation. And I think these are the 3-4 things which we think we should do apart from focusing on business parameters, which we have already spoken.
Business parameter is a follow-up of technology and human resource which you will empower. If they are in place, I suppose the profitability is just a matter of time. Sir, what kind of spend have we budgeted for technology? What kind of budget have we taken up for human resource development? Whereas skilling of your staff, existing and new so obviously will come at market salary, but existing staff is concerned.
See, I'll just give you a brief idea about the IT budget. I was 2-3 days I was sitting with the IT team. So for this quarter, we have initiated or we have planned a few things which we need to incorporate or onboard, and the total spend, including IT infrastructure, even cyber security, and digital transformation. One more, the API gateway, treasury solution, AML solution. We are centralized forex and domestic trade finance, centralization of that. All these things, if I have look at during this quarter, which we have planned, if all the plans are in falling in the right direction, around 200 crore of additional spend we are planning in this quarter itself. And for the next quarter, we'll be budgeting now based on the initiative which we are planning, maybe in a month's time. But for this quarter, we have planned around 200 crore of additional spend on IT.
So 200 crores may be only for the quarter, but for the initiative which you take, will you drop for next 1 year or 2 years some sizable budget, or this 200 is just a precursor to actual budget which you will decide?
200 crore is only planned for this quarter. And next year, the budget will be higher because whatever initiatives we have planned, all like data warehouse we have already planned. Phase 1, we have already placed order for around 220 crores. But the overall cost is around 70 crores. So 50 crores will go in the next quarter. And then our overseas Pinnacle upgradation also we have planned. Likewise, ALM and transfer price mechanism solution we are also planning. So all these things will come.
Sir, and the human resource, you said that you are hiring many people from market and you will be skilling some existing setup. So how many positions are you creating for IT? How many for credit? Some kind of idea which you can throw?
See, for credit, we have already advertised around 50 positions. And for IT, I believe it is 20 or 120. IT, we have already advertised for 20 positions. We have already hired IT consultant. We are now given advertisement for CTO also. We have given advertisement for HR advisor also, learning and development advisor also. Even we are going for a gold vertical advisor also. And risk management, around 15 positions we have already advertised. And security officers also we have advertised. And what else? Agriculture officers also. Collection officer also we have advertised. So these are the product specific advisors and the positions we are creating and will be hiring people.
So you see 2024 taking a lot of time for initiatives and showing you results at the same time, but the actual result may follow in some time to come, I suppose.
Yes. There is actual result will be in the next year only.
Okay, sir, you mentioned to one of the participants asking a question on corporate and RAM book of 60-40. It's comfortable whether you do 60, 62 or 65 and 35, whatever suits you based on the NIMs which you get. But if I have to ask you a question, UCO Bank is attracting what kind of customer base today in the corporate world, which is giving you a reasonable return at the same time comfort on quality? I mean sector wise, where are you seeing growth coming to your bank?
See, one sector is I think infrastructure, iron and steel, metals. These are the two sectors where we are getting. Even textile also we are getting. Even this ethanol, that is also one area where we are getting some good proposals. And apart from that, I'll just share with you. Even NBFCs, we could get some good proposal. PSUs, we were able to get good proposal. Food processing also, and iron and steel, food processing, cement, infrastructure. Yes, these are the areas where we are getting proposals.
So secondly, have you tied up with PFC, REC and IREDA for any kind of...
With IREDA, we are in the process. Our internal approvals are there. I think we will be now entering into a MOU with them for the co-lending arrangement.
So co-lending, and they would process or you would process the business?
That is, they are the term lending institution. They will be processing, and we will look at from our policy angles, and then wherever we are in a position to participate, we will participate. And second option will be room will be, because they are the term lending. All the projects require working capital, so we will be participating in the working capital requirement as well.
Sir, my one question, you answered that you look at QIP. Looking at the market condition for PSU stocks marketed by our Honorable Prime Minister is the biggest flavor of the year. If people have made handsome gain, it is not in private sector but public sector stocks, whether it is public PSU banks, defense stocks, railway stocks, multiple. Looking at your current condition with government holding, why would you dilute your holding by doing a QIP and not a OFS? I'm not expecting an answer from you, but I'm just saying you should debate to take the advantage whereby government also has a benefit. At the same time, you get benefit because your CD ratio doesn't need a higher equity base because your retained profit and the trajectory itself will give you growth next year. So I'm just putting up, and I'm sure you have tier 1 bonds ka appetite too, whenever the yields are in your favor, not today's market condition.
See, I've already spoken that we'll be taking up with the government for OFS as well, because this is a call the government has to take. We can only suggest them or we can only request them to go for that way. But if at all, we have to look at from the growth requirement. Particularly, we don't require capital per se, because our existing TRAR, Tier 1, CET1, even after considering the growth of this quarter and 9 months, it is at 16.01%, and if we add back our profitability, it will be around 16.9%. So next quarter profitability will also be added. So I believe by next quarter it should cross 17%. I think.
Sir, one question to Sabuji. Based on the current money market and the bond market, if corporate bonds are available at 9.5%, and you are lending to AA and AAA and maybe A-rated customers at MCLR plus quarter or MCLR plus half, if it is NBFC, it may be higher. And if you estimate that the inflation rate as what RBI is guiding and what you spoke, will we take some advantage? I'm not asking for your position. Will we take some advantage differentiating like SBI in the market, or we'll stay with the entire pack and stay away from it?
No, we are not staying away, and we are very much in the market. And there are 2-3 points which we consider while we go for investment in corporate bonds. Number 1 point is the duration. As you can see from our duration, it has already increased a little bit. That is consciously increased. So that is around 3.21. So we are consciously keeping our book duration at around 3 to 3.5 only. So we are not going in very long duration bonds. That is number 1. That number 2 is that we are also exploring for better rated bonds only. So that may be AA and AAA only. Number 3 is that we should get sufficient return also. The coupon also has to be considered. Keeping in view all these 3 points, we are consciously increasing our book. As you can see, quarter on quarter, there has been an increase in the bond portfolio, non-SLR bond portfolio of our bank. So selectively, we are going for that corporate bond also. That is very much open for us.
Sir, today HSBC in the leading journal, which is published from Calcutta mainly Business Standard, is carrying an article that we should get 100 billion flow into corporate bond market in 1 year, or the time frame, what it may be 2 years. 100 bond, I don't think so India has ever witnessed this flow even in equity on a cumulative number of years. Not that the holding is much larger, but if you take a 1 or 2 year span. So looking at your CD ratio, this is just a suggestion. No compulsion from my side. I think we are well placed because our CD ratio being at 70, we may be a better place than some of the other larger banks whose CD ratio at 75-80% and are jumping around for IBPC. The largest bank is looking at support from banks like you to take over some assets on a short-term funding. I think we are well placed, and I feel the team which is managing UCO Bank today at top level has potential to dramatically surprise the market. So I'm asking this question, nothing beyond that.
Thank you, Sudhir. Thank you. I think it's a very relevant point you have made. Team is well cognizant of this fact. They are looking for the opportunities as well as it comes the way. Maybe next quarter will give you some news. Yes, yes.
Sir, thank you for answering all my questions and best of luck for 2024 again.
Sushilji, one more thing I would like to share, that we are holding provisions also on the standard book, and that is around 3,000 crore in the standard book, of which around 1,500 crore is our mandated provision in terms of RBI guidelines of 8 June circular or 7 June circular or RF1, RF2 or NPLL 2 credit standard assets. But apart from that, in SMA 1 and 2, June quarter we provided 189 crore because at that time SMA 1 and 2 more than 1 crore was around 2,041 crore. So 189 crore we have provided, but our SMA 1 and 2 more than 1 crore has come down to around 1,200 crore, like 1141. But we are not reversed that any provision. We are continuing to hold 189 crore in SMA 1, 2, more than 1 crore provision of 189 crore. COVID provisioning of 530 crore we are continuing, and we have already provided for IMPS provision. If any case there is a shock, we have already provided for the 100% provision, and we are also maintaining contingency provisions in addition to that. So total put together, we are having around 1,335 crore of provision on a standard asset, which is beyond RBI mandated, around 2,800 crore, 2,900 crore. The total provision.
You're prudent to carry almost 1% of your asset as cushion for future when the environment is very good. So then I may ask one more question as time permits. If somebody is not in a, what is undisbursed credit line which you have sanctioned today?
It's around 5,000 crore.
5,000. And what kind of pipeline do you see in infrastructure and corporate bank in the current quarter?
The same, it is a mix. Infrastructure also, corporate also, PSUs also, NBFCs also. Everybody is reaching out for additional line.
No, but higher. Are you seeing higher amount than the last quarter, or as the market is tight, the bond market may be not conducive, so people will line up at banks to take more borrowing?
It's slightly higher side corporates or the NBFCs which were not earlier approaching, they have also started approaching that.
So thank you and best wishes to all your aspirations and thoughts which you have shared with us.
Thank you. Thank you.
Thank you, sir. This was the last question. We thank UCO Bank for taking the job of hosting the call. I would hand over to MD sir for his closing remarks.
Thank you, all the analysts, and thank you, our antique stock talking for arranging this phone call. And before we conclude, I just want to reiterate and share that bank has been doing consistently well on a quarter-on-quarter basis, showing sustainable growth, improvement in the asset quality by reduction in gross NPA, net NPA. Slippages are under control, and whatever guidance we have given, we believe that will be within the guidance in the next quarter. Thank you. Thank you, all the analysts.
Thank you, sir. Thank you, everyone, for joining in. This concludes the call. Everyone can disconnect the line.